Ever felt like navigating the stock market is like trying to solve an impossibly complex maze? You see endless charts, blinking numbers, and 1,000 different paths, leaving you feeling utterly lost and confused. What if I told you there's a way to cut through that complexity, to find a single clear path designed for beginners? Well, that path has a name, and it's called an ETF. It might just be the simple start you've been looking for. So, what exactly is an ETF? Imagine you're at a grocery store, but instead of produce, you're shopping for stocks. An ETF, or exchange-traded fund, is like a pre-packed shopping basket. Instead of painstakingly picking individual stocks one by one, an Apple here, a Johnson & Johnson there, you can buy a single basket that already contains a curated collection of them. This basket might hold shares from dozens or even hundreds of different companies, perhaps focusing on a specific sector like technology, or covering the entire market. Once this basket is assembled, it gets its own label and is traded on a stock exchange, just like an individual stock. You can buy or sell it throughout the day, making it incredibly convenient. It's no wonder beginners are flocking to them, and a big reason is diversification. Think about the old saying, "Don't put all your eggs in one basket." If you invest all your money in a single company and it performs poorly, your entire investment is at risk. But with an ETF, your investment is spread across many different companies. It's like having a specially designed basket that holds and protects your investment egg by cushioning it with a wide array of company stocks. If one company stumbles, the others can help balance it out, reducing your overall risk and giving your portfolio a stable foundation to grow upon. Another major draw is the low cost. Traditionally, managed investments like mutual funds often came with hefty fees. These fees might seem small at first, but over time, they can eat away at your returns like a persistent pest. Imagine two piles of coins representing your investment growth. The pile for a high-fee mutual fund visibly shrinks year after year as fees are deducted. In contrast, the pile for a low-cost ETF remains almost entirely intact, allowing your money to compound more effectively. Those small savings on fees can make a huge difference in your long-term financial journey, leaving more of your hard-earned money to work for you. Finally, there's the sheer simplicity of it all. Getting started with ETFs is refreshingly straightforward. In today's world of modern investing apps, you don't need to be a Wall Street guru to get in the game. With just a few taps on your smartphone, you can research, select, and buy an ETF. It's as easy as adding an item to your online shopping cart and clicking buy. This ease of access removes many of the traditional barriers to investing, empowering anyone to start building wealth without a complicated process or a deep knowledge of financial analysis. By embracing ETFs, that once confused beginner lost in a maze of charts can transform into a confident investor. You can stand proudly, watching your financial future grow, much like a plant whose leaves are made up of the very companies you've invested in. It's about planting a seed today that can flourish into a strong, diversified portfolio tomorrow. For those taking their first step into the world of investing, remember this simple truth: ETFs offer a smart, simple start to investing.